Today I'm going to show you how to invest your first £100, and it's not just going to be me using loads of technical, complicated jargon showing you how clever I am. Well, because I'm not. I like to keep investing simple, and that's what you're going to get in today's video. By giving you a step-by-step guide on how to invest that £100 in the stock market. I'm going to give you the exact info you need to get started in the stock market, including the index fund I currently invest into and why I chose it back in 2019. According to money.co.uk, 17% of UK adults don't have any savings of any kind, and 36% of UK adults use their current accounts to save money. Taking inflation into account, these are worrying statistics. What I would say is that the current financial system is broken, and you need to protect yourself against the harmful effects of inflation. Inflation means you're getting less for your pound every single year. If you live in the UK and other countries around the world, there is no doubt you will have felt the effects of inflation over the last few years. The way to protect yourself is to put your money into well-researched investments. To drive the point home, let's compare saving and investing over a 20-year period. You can currently get 5.5% in a UK savings account. And looking at 100 years of historical data, you would have got 10.64% returns on average each year by investing in the S&P 500 over in the United States. Let us say you put £500 into a UK savings account each month for 20 years, and you get an average 5.5% per annum. You would end up with £217,813. But if you put 500 into an index fund that tracks the S&P 500 each month for 20 years, and you got an average return of 10.64% per annum, you would end up with £412,762. I'll rest my case. Please understand that nothing in this video is financial advice, and there is no guaranteed returns with savings accounts or investment accounts. Anyway, I've gone off on a bit of a tangent. The main focus of this video is how to invest your first £100, specifically how to invest your first £100 in the stock market. Now, you could go with individual companies like Tesla, Nvidia, or you might want exposure to crypto, so you go with Coinbase. Yes, you can get higher returns if you pick the best performing asset, but it's a big if, especially when you first start investing in the stock market. The volatility and potential losses associated with individual stock investing is hard emotionally, not good for your mental health, let's put it that way. And you should really be investing with safety in mind. That's why you're going to invest your first £100 into a low-cost index fund. Personally, I like to capture the overall trend of the market on a global scale, but we'll get to the fund I invest into a bit later on. With index funds, there are a few things you need to do before you invest your first £100. So here's that step-by-step guide I mentioned before. Step 1, understand what index funds actually are. An index is a grouping of stocks, bonds, and other securities. An example is the FTSE 100 in the UK, and this is an index of the 100 largest public companies in the UK. The index fund will buy shares of stock in all of the companies in a particular index, like Vanguard's FTSE 100 Index Unit Trust. As stated on the Vanguard website, the index is a market capitalization weighted index representing the performance of the 100 largest companies traded on the London Stock Exchange that pass screening for size and liquidity. So this fund basically has a small slice of all the companies that make up the FTSE 100. Step 2, what account to use. Before you buy your fund or funds, you need an account to put it in, and you want that account to be tax efficient. That protects you from the tax man. In the UK, this is typically a SIPP, self-invested personal pension, or an ISA, individual savings account. Now, there are benefits to both. The main thing is to shelter your investments from tax, so you're tax efficient. My preference, by the way, is to use a stocks and shares ISA. I like the fact that I can access my funds at any time, and I don't have to wait until my late 50s. I like the flexibility. Step 3, what platform to use. Now we need to choose a suitable platform. I've used quite a few, including Vanguard, Hargreaves and Lansdown, and AJ Bell, but my preference is Vanguard based on the low costs and ease of use of the platform. I started with Hargreaves and Lansdown back in 2019, but I moved to Vanguard later that year because the costs were lower. If you choose to go with a fund within your ISA, for example, compare funds on a fund rating site like Morningstar. Put the work in and do the research. Step 4, what fund to go with. Take your time to choose your fund. I started with a Life Strategy 80/20 fund back in 2019, made up of 80% stocks and 20% bonds. But I've now moved to a Life Strategy 100 fund because bonds aren't very good when inflation is high. Think costs and taxes. I invest into a low-cost index fund and I'm tax efficient as I use my ISA. What fund you go with is very much dependent on your risk tolerance and your financial goals. If you're fairly high risk like me and you're going to be investing for a long time, like 10 years or even longer, you might go with 100% stocks, like my Life Strategy 100 fund. If you're risk averse, you might go 50-50, and that would be 50% stocks and 50% bonds. Let us imagine you're in your late 50s and have £500,000. You're going to be thinking about preserving your pot of money. So you wouldn't be going high risk, and you might even go 40-60, and that would be 40% stocks, 60% bonds. Read a few books and it's going to give you an idea of what fund to go with. A book I would highly recommend is Reset by David Sawyer. You can also compare funds on a fund rating site, again like Morningstar. This is the sort of level of detail that will separate you from most other investors. Step 5, how to invest using Vanguard or similar. Open a brokerage account with Vanguard or any other similar investment platform. You're going to need to provide personal identification information and funding source information. Choose your index funds. Vanguard and the others offer a variety of index funds to choose from, each of which may vary in their fees and performance. Before making a decision, research each fund's historical performance and management style. Once you've identified your preferred index fund, it's time to place your buy order. You're going to need to specify how many shares you want to purchase, basically how much you're going to invest each month, how much you can afford, like that first £100. And this is where you invest using your first £100, what I mentioned at the start of the video. Finally, you're going to go on and monitor your investment. After purchasing your index fund, it's important to monitor them regularly to ensure they align with your investment goals. Keep an eye on the fund's performance, fees, and any changes to its holdings. Once you understand index investing, you'll only need to do this really once or twice a year. Then it's all about set and forget. To give you more of an idea of what index fund to go with, let's look at the fund I eventually decided on back in 2019, when I first started to invest into index funds. So there are index funds that do all sorts of things. You have funds that track the top companies in the United States. You have funds that track the world, funds that just track emerging markets, index funds that track the world without the United States or without the UK. Like picking individual stocks, I wouldn't personally go too narrow with your index fund. Let me explain. Let's say your fund only has exposure to the FTSE 100, so just the UK. But what if the UK has a bad 5 years or even 10 years? Then your fund is going to perform poorly as a result of what's happening in the UK. Just something for you to consider when you're choosing your fund. This is some of the reasoning for me for choosing the Vanguard Life Strategy 100% Equity Fund. The main reason for this, or reasons for this particular fund, is the low cost and the fact that it's globally diversified. So if the UK isn't doing well, it won't really affect my investments. I really like diversification because I haven't got a clue what countries are going to do well over the next few years. The Life Strategy 100 fund is seriously diversified as it contains just under 7,000 holdings or companies. Going with a globally diversified index fund, you're removing a lot of that risk and you're just capturing the trend of the overall global market. You're betting on the global markets going up over time, not just an individual company like BP or a country like the United Kingdom. A word of warning before we wrap things up. With any investing in the stock market, you need to get comfortable with volatility. Just look at the performance of the fund I invest into. There have been some years when the returns haven't been very good at all, like -6% in 2022 or -5% in 2018. Many retail investors would panic here and even sell up, Please don't do this, as you would be locking in your losses. Try and adopt a long-term approach. Read books by Ray Dalio, John Bogle, Andrew Craig, Tony Robbins, Warren Buffett, etc., etc. And these expert investors will help to calm you down and help you through periods of volatility. This is what happened to me in 2020. The markets were all down due to COVID, and I continued to invest in my low-cost index fund every single month. So now I'm going to hand over the baton to you. You now know what an index fund is, how to buy them, and hopefully you've got a good idea of what fund you're going to go with. Now it's up to you to go and invest that first £100. If you want more info on how to invest, see below, where I provide links to further resources to make it as easy as possible for you to start investing in the stock market. With everything I've got, good luck with your investing, and thanks for taking the time to watch this video.